So first off, on pricing is it depends on you. So where are you in your career and situation? So if like say it's me and I'm almost 60 years old and I'm pitching a new client, I've got a very stable income and backup and reserves and savings and all that, and I'm just not desperate to get a client. I might bid let's just say it's a typical mom and pop, 3 dispensaries, 2 farms, and 7 entities, and they're somewhere between 10 and 15 million in sales and growing rapidly. If it's an existing company, and it will depend if it's an existing company or a startup. If it's a startup, I might throw in some equity. And I might even give some options as well. But say me bidding this client that's, let's just say they're at 10 million. Um, I might be bidding. I certainly would not do it. Like my starting point would be probably 150 grand a year minimum for all in bookkeeping, accounting, CFO, and tax services. I never ever, when I'm pricing, ask them what they want or need. We just tell them we're going to do the whole ball of wax, basically the in-house stuff. If they hire us, they won't need a full-time CFO and an accounting staff because we're going to come in and do that. But it's not going to be cheap. It probably, very likely, will be less than them hiring a full-time staff. Not to mention, we'll give them a better product, and they won't have to worry about turnover and issues like that as well, or payroll taxes and whatnot. Um, but that said, say my minimum is 150 grand a year. Say someone else just comes into the program and they're a single mom and they just lost their job and they need to put food on the table. They might bid it much, much lower. Or maybe they'll take some more equity or whatever. So there would be options. Now I've seen people for client one. So pricing again, this is another lens to view it from. If this is brand new client one in the niche, I've had people take free for 6 months, not charge anything because they wanted to learn the industry, they wanted to meet people, they liked the client, they wanted to get a testimonial, they wanted to get their feet wet and practice our system. They wanted to. You can get all these kind of benefits from client one. They wanted to meet, say it was a farm, and they're working for free for 6 months. They'll meet dispensary clients, and they can very quickly, client one in this industry, since there's many vertical niches, can lead into several other clients. So there's possibly many reasons to go for that. But say it's not client one, say you're on client three, we want you to use our price quoting tool, and it's probably going to spit out a range of, okay, the minimum, and this is from my lens, the minimum I would take this client would be 5 grand a month, and the max 7,500 or 8 grand, whatever, something there. So there will be a range, and you'll get to decide, oh, do I really want this one? Or I'm really busy the next 6 months. Maybe I don't want it. So I'm gonna bid 8 grand and just think I probably won't get it, but maybe you will. Then we review our fee. There's flexibility on our initial price. For another reason, we're going to look at the fee every single quarter. We let them know that immediately in our offer. It's in our engagement letter. We're going to look at our fee every quarter, and we want them to know that more than likely the fee is going to grow with their growth every quarter because they're growing and our fee will grow. And that gives us, if say I do price it at 5 grand a month and I real quickly realize it should be 7, 8 grand a month, that's fine. 90 days in, I'll get a 7 grand, and then we'll keep working our way up as their growth, complexity, revenues, many factors. It's not just only based on revenues. So we'll look at all those different things, and that gives us the flexibility to do it. But we're not going to ever itemize AR, AP, payroll, or whatever. We're going to provide pretty much everything they need, and sometimes in that CFO hat, it could be anything. You might have to. I mean, I don't know. So I always say, yeah, I'll pick up the CEO's laundry if I need to. CEOs are that person that can fall back on if they need help with compliance issues or whatever. But we're going to be tracking what we're doing, and if it expands and they want help with OSHA compliance or whatever, great, we'll do it. But we're going to charge more money. So we're going to always have a flexibility to increase our fee every quarter. So that means we don't have to stress out about getting the fee perfect. Oftentimes now I'm pitching to, especially client one, give them a couple options, especially if it's a startup. I will say, okay, option one, if you're raising money and Say you think you're going to raise money in the next 6 months and you're raising 5 million. Okay, for normally I wouldn't charge less. And I saw this. Normally I wouldn't charge less than 6 grand a month, but I will do it for. Well, I'll give you the option: 6 grand a month for that 6 months. Um, Pay as you go. Actually, maybe I give you three options, or you could pay 8 grand a month for the first 6 months till we raise capital, and you don't have to pay me, or maybe you pay me like a down payment, and then you'll pay all the rest of the capital raise. Or option three is I will do it until the capital raise at say 2,500 a month, but I want 3% equity, or 4%, or 2%, and it depends on, again, everything always depends on you for one, but also the company. If I get into a company that looks really good and it looks like, oh, they've got secured an amazing license, they're more than likely going to raise the capital, they got a great team, they're in a great state, yeah, I might say, oh, I'll do it for no cash and give me some equity. So we'll play around with that. But if you give them some options, that makes it a little bit easier to land, especially client one. Now, if I'm on client three and a startup shows up and I'm like, look, um, I will do this, this, and this I will get a retainer. Say I will work for X amount of time, pre capital raise for 15,000 and 2% equity or whatever, or we'll just decline that. And so in the offer letter, we want to reiterate what we call our 5 key value drivers that show all the value we're going to deliver, which is not a list of services. It's things like improving your cash flow and rock solid audit ready accounting and correctly minimizing your taxes and things like that. And then we'll show them in our value chain document how we deliver that. We'll give them a couple options on pricing, and we will let them take it or leave it. We're not going to do a ton of free work. We're not going to have 83 follow-up calls. We're not going to talk to every single partner. We just don't have time for that. You've got to have an ROI, and you've got to assume most of these offers aren't going to be landed for one reason or another. So don't kill yourself on one single offer. Trying to think. Let me make sure I didn't hit any of these S to these. Scaling our rates. Again, I reiterate that I do not ever ask a business owner what they need because they have no clue. I know what they need. They need amazing, in this industry, rock solid accounting. They don't have it. 9 out of 10 companies in this industry do not have it, period. And they need it. I know they need it. And I know how to do it. And they certainly do not know how to do it. As a matter of fact, most other accountants don't know how to do it, but certainly the business owner doesn't know how to do it. So we're going to provide that rock solid accounting, and then that's going to leverage into the other things they want, which is great world-class reporting, improved cash flow, correctly minimize taxes, and peace of mind. But that's where we're going to start with. And then it could expand into, like I said, things like compliance or software implementation. That came up in the conference too. These people need help figuring out how to implement seed to sale or metric or recommendations on POS, etc. And Melissa Diaz, who's really good on tech, and talking with me yesterday at the closing session, and she was like, do not do those for free. But I would reiterate, don't do any of this stuff for free. If you're helping them find a bank account, we are making them pay. Now, we're not tracking every hour, but if I know as the scope creeps into software or compliance, other things, I'm just going to increase the fee. If we're at 7 grand and whether they add a new dispensary in the next quarter or they want me to help a software project, that's great. I'm going to go to 9 grand a month, and then we're going to go level. And I'm always going to be ahead of the game. I'm going to be looking backwards, knowing that hopefully on any client, as they grow, my fee is going to grow, but also my profitability is going to grow because we're going to set up systems, etc. So anyway, I think that is it on today on pricing. It always depends. We talked about this in the very first session. What's the best entity structure? What's the best, how do you do 471? So many different questions in this industry. The answer is it depends, and we have to dig deeper than just saying, oh, this is the answer or that's the answer.